What are the latest Bitcoin predictions for 2030? Now that the prices are low, is it worth investing in? Will the price ever go up? Could it be worth seven figures in the near future? As the very first cryptocurrency, Bitcoin continues to have the highest market capitalization in the crypto market. It has also managed to move far beyond being a peer-to-peer version of electronic cash to becoming a store of value and a hedge against inflation. 2022 might have been a terrible year for Bitcoin value, but this does not change the fact that this digital currency has been on a super roller coaster since its creation in 2009. In 2021, BTC's value surged from $29,374.15 on January 1st to $46,306.45 on December 31st, managing to surpass the $60,000 mark twice. However, so many uncertainties surround the future of this coin due to the current dramatic drop in the price of over 60% decline compared to the starting value price of the year 2022. And everyone keeps asking, will the price of Bitcoin increase over time? What are the Bitcoin price predictions for the decades ahead? For the first time in a long time, the Bitcoin value price dropped to its lowest level in June 2022. Though so many factors were responsible for this, such as a wide cryptocurrency crash and global economic instability, coupled with the ongoing war in Ukraine, nevertheless, there are still quite a handful of Bitcoin advocates who believe that its value will definitely bounce back. This volatility has played out before, quite a number of times. In 2017, the value of Bitcoin fell from $20,000 to $3,000. And just see how it bounced back in 2020 and 2021. Seasoned investors know that once a market hits its lowest point, it will bounce back. So oftentimes, they ride on this volatility. Michael Saylor, founder and CEO of MicroStrategy, MSTR, recently tweeted, "In Bitcoin we trust." He further stated that during times of stagflation, the best investment strategy is to hodl scarce, the desirable property you can afford to maintain. Will halving boost BTC price again? Some analysts are also of the opinion that halving could help boost the BTC price. Bitcoin has a maximum supply of 21 million tokens, and as of now, 19.245 million BTC is already in circulation. In order to reduce the rate at which new Bitcoins are issued, the cryptocurrency was designed to undergo halving events every 4 years. Halving is a crucial event in Bitcoin's blockchain. This is when the supply of new coins and the reward for mining them is reduced by 50%. Each halving reduces the rate of circulation, making the token more scarce, thus pushing the Bitcoin price forward. According to Joe Burnett, a mining analyst at Blockware Solutions, Bitcoin's halving sessions might favor its future price. In the coming years, Bitcoin will become more scarce. The final 1 million BTC won't all be mined until around 2140, about 100 years from now. This ever-increasing scarcity will be a large driver for the future price of Bitcoin, with long-term crypto investors and institutions holding onto their digital assets for years. Only a small portion of the total supply will be in circulation, forcing newcomers or enthusiasts to pay a fortune to get their hands on some, Burnett told Capital.com. But Capital.com's team has a contrary opinion. According to their research, after each halving event, the value of BTC enjoys a speculative bubble that only lasts between 12 and 15 months. The last 3 halving occasions, which occurred in 2012, 2016, and 2020, saw the BTC price increase by 9,915%, 2,949%, and 665% respectively. It's obvious halving tends to generate some sort of hype and buzz. But going by these previous cycles, do they always imply that Bitcoin's future price will rise? Capital.com's team once stated in an interview, "Judging from a historical perspective, every halving drives the BTC price rise a little lower, implying that the influence of Bitcoin halving might be winding down. That's not to say that the halving won't drive up the price, but it's glaring that its impact decreases every 4 years. As of 2022, Bitcoin miners are awarded 6.25 Bitcoins, or BTC, for each block they successfully mined. This figure will fall to 3.125 BTC every 10 minutes in 2024, 1.5625 BTC by 2028, and these figures are what will determine the Bitcoin price value in 2030 and beyond. Other factors shaping a BTC price prediction. Another factor that could positively influence the Bitcoin price prediction is the total global cryptocurrency market cap. At the beginning of 2020, the total global cryptocurrency market cap stood at around $191 billion. By December 2021, it was over $2 trillion, which was recorded as its peak. Presently, it's hovering at around the $891 billion mark, a figure larger than the gross domestic product of Canada. This is according to the Global Wealth 2022 report by the Boston Consulting Group, which also predicts that this value could grow 4 to 5 times bigger before the end of the decade, notwithstanding the current gloomy situation. In addition to that, the rising adoption rates could positively influence Bitcoin's future price. For instance, the coin's value increased by 12.52% after Tesla CEO Elon Musk tweeted on the 2nd of April 2021 that people could buy his electric cars using digital currency. It boosted the price from $52,774.26 to $59,384.31 within a few days. BTC was also adopted as a form of payment by 7,879 merchants as of June 2022, and this number keeps growing. The adoption of BTC as a legal tender by El Salvador in early September and the launch of the Bitcoin Futures Exchange Traded Fund, or ETF, in October will definitely influence the value price of Bitcoin in the future. This Bitcoin-linked ETF now offers retail investors diversification, protection, liquidity, and a new way to get involved in the rapidly growing world of cryptocurrencies. And who knows, 1 or 2 notable investors could start a bull run. All they need to do is announce the replacement of 1 or 2 of their assets with Bitcoin. It could be a pension institution announcing that millions of their members will now have their retirement money in Bitcoin. Such news would drive the Bitcoin price sky high. As funny as this may sound, many Bitcoin investors want that to happen. However, the growth of this crypto coin is not without threat. Tammy DaCosta, a daily FX analyst, emphasizes that while Bitcoin is the father of cryptocurrencies, it may face far stronger competition from Ether, the second highest digital asset by market capitalization. Because the Ethereum blockchain is more environmentally friendly and the limitless supply of coins make it a more viable alternative to governments or institutions that are embracing the concept of digital assets as a potential means of exchange, provided there is regulatory control, she told Capital.com. Is Bitcoin a good inflation hedge? A few analysts also pointed out the similarities between gold and BTC, which could be another positive factor driving the price of the cryptocurrency. The similarities between Bitcoin and gold are difficult to ignore. Both are viewed, rightly or wrongly, as a natural hedge against inflation. There's a finite amount of both. They usually have relatively low correlations to equities and fixed income, and they act as a store of value outside of traditional systems such as governments or central banks. This was published by ETF Stream in the March 2022 report edition. JP Morgan analysts also shared a similar line of thought. They believe institutional investors appear to be returning to Bitcoin, perhaps seeing it as a better inflation hedge than gold. According to DaCosta, the comparison should not be limited only to gold, but more in line with technology stocks. Throughout last year, Bitcoin was seen as a potential hedge against inflation, a characteristic akin to gold. However, this narrative has shifted in the first quarter of the year as the direct correlation between cryptocurrency and tech stocks becomes more apparent, DaCosta told Capital.com. Even with all these positive indicators, Burnett of Blockware Solutions believes BTC should be considered as a very volatile long-term savings account and not as an investment, as it offers no potential future cash flows. Bitcoin price predictions 2030 and beyond. As of December 20th, 2022, the algorithm-based forecaster Wallet Investor rated Bitcoin as a bad long-term investment. Based on its analysis of the cryptocurrency's past performance, the website predicted that the price of Bitcoin might reach $10,101.73 by the end of 2023 and barely $1,945.65 in 5 years' time. Digital Coin Price, on the other hand, predicted that the coin might be worth an average of $237,610.35 by 2030. While the algorithmic forecaster could not predict Bitcoin's prices in 2040 or 2050, it did predict that the coin may be valued at $323,886.07 in 2031. Meanwhile, price prediction forecasted a high positive Bitcoin price for 2030. According to the website, the BTC price may rise to $386,372.96 that year, with a possibility of increasing tremendously again up to an average of $545,322.48 in 2031. Telegon also predicted Bitcoin might be worth $175,109.22 in 2030, and even double up to $353,429.23 by 2040. According to the website's Bitcoin price prediction for 2050, BTC might reach $646,234.22. Are these algorithm-based projections reliable? Please note that algorithm-based price projections can be incorrect because they are simply estimations based on prior data. Analysts' views on BTC forecast for 2030. A panel of 55 industry experts surveyed by Finder in October 2022 predicted that the coin will rise to $270,722 by December 31, 2030. Meanwhile, ARK investment analyst Yassin Almandra predicted some time ago that Bitcoin would reach $1 million in 2030. CoinLoan founder and CEO Alex Falushin also agreed with ARK Investment's weird predictions, stating that if effective cryptocurrency regulation is established, more institutions will adopt the coin and thus enhance the price of Bitcoin by 2030. By 2030, BTC may reach $1 million per BTC, given that many funds are just beginning to pay attention to it and many people are just starting to use it, he said. According to Mike McGlone, senior commodity strategist at Bloomberg Intelligence, limited supply and rising demand would surge the Bitcoin price predictions. The analyst expects that by 2030, the $100,000 mark will be the lowest benchmark on the BTC price chart. The bottom line is that supply is decreasing by code and demand, while adoption is increasing. I expect those patterns to continue for Bitcoin, which is well on its way to becoming the digital collateral standard in a world going that way, McGlone added. Hawk Finance's Mark Baza, on the other hand, forecasted a higher Bitcoin price. He predicted that the token would reach $1 million within the next 8 years. Look at it this way, he said. A whole new generation of young people will be introduced to easier ways to buy Bitcoin and interact with cryptocurrency, because they'll be confronted with greater costs of living, US debt, inflation, and a property market that's practically out of reach. But if they learn about Bitcoin and how it is indeed their money, they will opt out of investing in common stocks in favor of an asset that keeps increasing and expanding due to its limited quantity and decentralized nature. Bitcoin's long-term forecast: overtaking fiat money? There's no doubt about it. A lot can change in 10 years. About a decade ago, Bitcoin was barely worth $1. So in terms of Bitcoin price predictions for 2030 and 2050, it's extremely difficult to anticipate its value for the years ahead, because several factors could significantly change and alter the cryptocurrency market's environment. Nonetheless, some anticipate that Bitcoin will replace fiat currency by 2050, as stated by a panel of 42 cryptocurrency analysts in a survey conducted by Finder earlier on in 2021. 54% of respondents said the digital token could overtake global finance in less than 30 years. Others were even more optimistic, expecting the token to exceed fiat money by 2040, or perhaps 2035. So what's the bottom line? It should be noted that since algorithms base their forecasts on historical performance, they are subject to error. Likewise, price predictions and analyst projections can all be wrong. They do not guarantee success. Neither should they be used as a substitute for your own research. Before trading or investing, always do your own research and never trade with money you cannot afford to lose. Thanks for watching, and we'll see you next time.